Hi guys, it's Thomas here from COTBase.com. Welcome to this week's Commitments of Traders review. Today we're going to have a look at the 36 Commitments of Traders report in 2013. And as usual, we're going to start off with the changes in commercials positions. So here we go. We've got sugar on top with a 34% change in commercials positions, a even greater change, 45% change in small speculators. You can see the changes over here, much larger than average. We have seen similarly large changes in the past, about roughly half a year ago. You can see that back then it was a very bearish signal, and as you can see, prices reacted. We may see the same thing happening again. As you can see, changes in sugar market do affect prices. Here's a bullish signal a few reports ago. Opening a 5 years chart, we're going to have a look at the COT Extreme. Here we go. You can see that generally speaking, the long-term picture, the fact that commercials were above the zero line a few months ago, suggests that in the medium to long term, we're going to see higher prices. And now we're moving away from these extreme territories. As we do, you can see prices are going a bit higher. So again, the near-term picture suggests we may see a decline in prices, but if we look ahead in a few weeks, month time range, we may see prices going much higher from here. Okay, moving on to live cattle, we've got a 33% change in commercials positions and roughly the same change size in large speculators. Again, the change can be visible over here, much larger than average. It's a bullish COT change signal. Opening a 5 years chart, we're gonna see how extreme this market really is. You can see that a few reports ago, or maybe just a report ago, we had a bearish relative extreme, not an all-time, but still it can be considered a relative one if we look at these examples. You can see that the bars are red, so prices reacted. And we're moving away from this relative extreme. I believe it's only the change signal that may affect prices at the moment. Okay, moving on to the S&P 400. We've got a 21% change in commercials positions over there. The changes can be visible over here. It's a bullish type signal from the COT report. And opening the 5 years chart, we're going to have a look at the extreme. Here we go. As we've talked about it in other indexes as well, we were and we are at close to all-time large COT extremes that are suggesting prices should eventually start declining. We're not seeing that happening right now in S&P 400. You can see last week prices rallied. So we may see the continuation of this rally, and then of course usually parallel with that happening, the extreme starts widening again. Moving on to large speculator COT Extreme. Here we go. We've got cocoa and lean hogs with all-time extremes, both in commercials and large speculators positions. So we're going to open cocoa first and have a look at that market right away, opening a 5 years chart. Here we go. You can see the extreme just widening as prices are going higher and higher. Of course, it's always a tricky question. We're at the all-time extreme at the moment, but is this the top? Well, usually all-time extremes can exist for a few weeks or even month for that matter before prices start reacting. One thing's for sure, stress levels are huge in this market, and we should expect prices to react sooner or later. Moving on to lean hogs, the very similar picture in lean hogs, all-time extreme. And let's open the 5 years chart just to see everything on a wider scale. It's a very bearish extreme, but you can see that prices actually could even rise in the past couple of reports. But anyhow, if we look at older examples from the past, you can see whenever we had a extreme very similar to the one we've got right now, usually prices started declining. So it's actually interesting which, of course, you know, this is a continuous chart, but you can see that there are some pretty big differences between the contracts themselves. But anyhow, extreme is there. So we can say that the stress level in lean hogs is very large, and we are expecting a decline in prices because this is a very bearish extreme, of course. And then we've got the 5-year note. We have a 293 report extreme in large speculators, but much greater extremes in commercials and small speculators. Okay, let's open a 5-year chart and see that on a wider time frame. Here we go. You can see the extreme, pretty large commercials at 300,000 contracts net long levels. Huge, huge, huge extreme. So obviously we are expecting prices to bottom out soon, and we may see much higher prices in the future. How about looking at wheat? Let's have another market for this review. Our last market, we only have a 68 report extreme in large speculators, so nothing too great. But of course, if we open a chart, we may see something more. Yes, actually, generally speaking, commercials being roughly at 70,000-80,000 contracts net long suggests that we should see prices rally soon. Here we actually, there's two major intervals on this chart when commercials were at such levels, and that usually coincide with a bottom in prices. So we're at that level right now, and we should expect prices to bottom out soon. Okay, that's all for this review. If you would like to have a look at other COT charts, you can do so at our COT charts page. Of course, if you would like to have a more detailed and in-depth COT analysis, well, check out our COT analysis page, where you could add other very useful functions to our table: the long-term trend, volume and open interest scores, the COT index, or you can look at new COT report types like CIT, TIF, or disaggregated, and other data types as well. I hope you enjoyed my review. I hope to see you next week. Have a great weekend. Take care. Bye-bye.